Hey everyone, wanted to do a quick little video as we get more questions about kind of when to take profits, how to take profits, how much do I take in profits, and I really want to do a really simple exercise to kind of show you why taking profits is good because we make money, obviously, but why taking profits to some extent also reduces your risk substantially. So I wanted to kind of use a couple of examples. There's really in the news, there's been a lot of coins that have been, they've doubled in price this year or really this month, or sometimes some of them have even doubled like in the last week or so, right? Or quadrupled or 10x or whatever. And the problem is our greed sensor in our brain tells us it's just going to keep going up, right? This is not only recency bias, meaning that like it's really what we're used to and it's all we really know. And so it's probably what's going to keep happening, which is not true. We also have confirmation bias that I've talked about in the past, which is we go out and we seek articles, we seek information that then confirms our hypothesis that it's going to keep going up forever. And so really what I wanted to do is I thought it'd be kind of interesting to kind of just spell this out as I was explaining it to somebody last night, just verbally, and I wanted to kind of walk through it. I thought this would spell it out really well. So let's just say you have $100 invested in a coin. That's the money you have in it. It then goes in, it doubles, right, in the time frame that you're invested in it, which is extremely likely here in crypto. Like basically everything will double no matter when you get in within the next couple of months, just because of really where we're at in the market cycle, right? That's not a guarantee, right? There's no guarantees here, but with high probability, it's probably going to continue to go up. So let's say that it does. Your account now has $200 in it. So your risk level is pretty low because for what it's worth today versus what you have in it, it's pretty low, right? And really where I want to take this conversation is once something doubles or triples or quadruples or 10x's or whatever, and you're like, hey, I think it's time to get out. A lot of people think it's all or nothing. Hey, should I take all of it out then? I made a video in the past about, maybe I sell all my coins for another coin and I try to capture this gain and put it into another gain. Should we do that? And let me kind of just show you how you don't really have to do it. You can reduce your risk substantially just by taking small amounts of profits. And so if you took 10% profit on a $200 account, that's $20, 20% and 30%, obviously, respectively. And really where I want to take the conversation is it doesn't seem like we're taking much money out, right? To take out $20 for a $100 investment, that's really, no big deal. Like that doesn't change my life, right? Obviously $100 isn't going to really help you, in the short term, but in the long term, $100 can turn into a lot of things. But the point is that if it's really this way, by taking out $20, you have $80 left in. But at this point in time, anything that goes up has to come down, right? By taking just 10% profits, what I've done is I position myself to where the price has to fall 60% in value for me to break even. So I now have extreme confidence that what's going to happen is if it starts to fall and it looks like, oh, this is probably the end, it doesn't look like we're really going to go much higher, I could always just take things out and still be profitable, right? Same thing with 20% profits, 30% profits. If I took $30 out of the 200 and I really left, I'd have $170 left in the account, but only $40 of my money left in the account, right? If I said that math right, what did I say, 200, well, you get the idea, you can do the math. The point is that the price has to drop 80%. Now, historically, what we really see with Bitcoin is Bitcoin likes the 50% range. At the lowest, it might go to 80 something percent, right? But if Bitcoin, which drops the least, if it's dropping 80%, what does that mean for the majority of altcoins, right? That means altcoins are going to drop more than 80%, 90%. My point is that you have plenty of time to really understand, I need to go ahead and get out of the market. And the more profits we take along the way, the better that this gets. See, if I take 10% profit this week, the price has to drop 60%. Well, I'm pretty hedged at that point. If in 2 weeks, 200% goes to 250% and I took another 10%, the price has to drop even further, right? So all I'm doing is I'm consistently mitigating risk while also maintaining my exposure in that asset. And that's going to help me not only capture the upside, right? But really what it's going to do is it's going to take a lot of the risk off the table. And you understand that if I took $100 out of a $200 investment, I put $100 in, it goes up to 200, I take 100 out, guess what? No money in it, no risk, right? And so then we're really just kind of along for the ride. When do we really want to get out? Well, whenever it's going to be high enough to justify taking the profits in our own minds, right? Based on what your vision is, your model is, or whatever. And that might seem rather simplistic, but I really feel like so often, especially if you're newer to investing or you're newer to crypto investing that can move very quickly, what goes up comes down, right? And so I wanted you to consider that, and I wanted you to think a little bit more about it. And I wanted to just make sure I kind of spelled it out so that really everybody understands that we don't have to cash out completely. You definitely can, but for those of you who are like, no, I'm really trying to build wealth here, how do I do that? Well, you got a couple options. You can either just stay in it for a super long period of time because you believe that asset is going to go up over the next X number of years. Bitcoin's a good example. And then if you buy Bitcoin today, whether you sell it or not, in 10 years, it's going to be worth a substantial amount more. There's really nothing stopping something that's worth $1 trillion at this point, right? But some of these assets that are very, very small assets, they may not be here in a couple of years. They may not even be here in 6 to 9 months. That's just a reality of small projects, right? Think of like penny stocks, same thing. These companies come in and out of business all the time. So just wanted to drop a quick note about kind of risk management, how we kind of view it, and why taking just 10% profit sometimes can really start to lower your risk substantially. I hope that helps. Keep fighting the good fight.